Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy Tuesday to you and your family. We're taking a look, of course, at Bitcoin. We'll take a peek at what CME futures. We're going to take a look at Bitcoin dominance, the dollar index, as well as, of course, perpetual contracts. Just kind of see generally what's going to happen next with the charts, because there's a lot that's going on. Obviously, we'll jump right into high block capital data too, so we can look at liquidation levels. And just want to say thank you again for taking the time to watch. And if you find benefit, whatever the case is, comment below and/or like, subscribe, the whole 9 yards. Also ask you help us grow our Twitter. Go ahead and follow there. We got tons and tons of awesome fundamental technical data, just really good stuff flowing in through that channel there. So be sure to check that out. Greatly appreciate those who've been able to help out so far with that. All right, so here's the thing with Bitcoin. We're going to just jump right into the CME futures here. These are basically the CME gaps that you might have heard about. I just highlighted some of the most recent ones so you can kind of see what's going on here. So the green basically implies it's been filled, and red means it's unfilled. Okay, now it's not to say that we're going to dip down to this level, but statistically speaking, majority of CME gaps get filled at one point or another. Sometimes it takes months, and sometimes it takes a few days, but for the most part, you will see them get filled. So we got a tiny little guy over here, of course, where the price gaps down, and then it gets filled a few days later. Same thing here as well. We can see right now the most recent one between 19.5 and 21,000 got filled. And then, of course, it comes down to get that filled, right? You see this come down, it fills the gap, and then it creates a new one. And again, these gaps are basically occurring on weekends, right? Because when CME futures are closed, they close on, Friday night till Sunday morning, roughly. Then that is essentially what happens when the price action gapped up over that weekend and took off. So there's that. There is a tiny one right here as well, but that one already got kind of filled, so we can kind of add that to it. But generally speaking, you can kind of see the common trend here, right? Where the price kind of gaps up, comes back down to fill the gap, and then it continues to move on its merry way. So that's just something to kind of note. We do have a gap somewhere down there in the low 20,000 range. If we get filled at that point, I think that would probably be the bottom. But my speculation is 25,300 is the bottom. That being said, taking a look at Bitcoin dominance here, we can kind of see it's roughly drawing dead. It's kind of going sideways here so far, and that's not a bad thing at all, right? Kind of just going even if you could. And if you take a look at the market, majority of things are red right now because we're just on the edge of this crazy little situation where Bitcoin could drop 27,000. If it does, we're going to see a lot more red in the market. So just please note that as the price of Bitcoin comes down and Bitcoin goes up, which is starting to scale up a little bit, alts are going to start bleeding. Say that profits are taken from alts going into Bitcoin. There's a typical cycle that continues to occur. So that's kind of just where we're at there now. This one is kind of funny. I had this as a chart on one of my Twitter. Just kind of show this resistance level here between 30,500 and 32,000, previous resistance zone, and these are just some areas of contention there. So there's a good chance that we may not break through that level immediately. Typically, it takes a good retest or two. And you could even argue that this is a really large cup and handle forming. Okay, so again, the stranger things can happen, but I'd be surprised or remiss if the price breaks through 30,000 and just doesn't look back. It makes a lot more sense for us to retest this most recent high here at 25,300. So let's talk about that in just a minute. In fact, let me just go ahead and note here that based on volume here, we are seeing somewhat of a dip in volume. Yesterday, there was a lot of volume. Keep that in mind. A larger amount than the day before. Of course, that was a weekend. And today also sort of low for now. But the reason why that's important is, of course, we have this support level at the 50-day SMA holding so far in place. It's not a great thing. That's pretty much the only constellation that we have to the upside. Furthermore, we have a lot of volume yesterday, and that volume from yesterday tells us that we could very well see further downside, because you see the bulls and the bears were fighting it out. We had a doji candle form. When you have high volume plus doji, it doesn't always reverse the way you want it to. Okay, so commonly you'll see the doji candle be like, hey, this is a sign of reversal, it's going to come back up. But no, when you have a tremendous amount of volume, it really just implies that there's more selling pressure than buying pressure, and the price is continuing lower. So to me, this is not a very good sign. This kind of helps me kind of lean more towards the bearish side of things. Okay, and taking a quick look here at the Bitstamp, of course, this just kind of helps us understand obviously the big picture and the overall moving averages. But what I like to point out is that we do have this descending trend right now. You can see it more clearly on the 4-hour, and until we break above that, we're not going to be in a good shape, or we're not going to have a leg to stand on. Okay, so for lack of better terms, right now Bitcoin is on the edge of disaster. I hate to say it like that, but there's a decent chance the price could continue lower from here. Okay, so again, be careful, be cautious. You can kind of see this level here getting retested multiple times, and the more often you retest the support level, more likely it is to break. So I send these out pretty much daily, but my anticipation from yesterday, this is kind of the chart that I drew out, just based on the fact that I feel like the price is going to continue to go lower from here. Okay, so I hope I'm wrong, and I hope the price goes up. Don't get wrong. I really want to be able to, have a position where we're all in good shape. But for the most part, right now, we can see that there's a lot of, we're stuck in this range, and until we break free from this range, it's difficult to trade in, right? Because it could literally drop like a rock or shoot like a rocket, right? We've seen that happen multiple times. So just be really, really careful with your stop losses and be sure to kind of keep everything in place. So, all right, sorry, that's kind of the overview of the other charts there, the other Bitcoin charts you don't typically look at. Furthermore, let's go ahead and take a quick look at High Block Capital and kind of understand where we're going out with this here. Because once again, we're at 27,200 to 300 range, right? We have, once again, a little bit lower volume here. It's volume starting to taper off. It's kind of averaging itself below the essential moving average. We can see the last 4 or 5 days, there's been very little liquidations to the long and or short side. Okay, so that's kind of good, but it's like the calm before the storm, right? I'm willing to speculate the Bollinger Bands are starting to compress, and we're going to probably see a breakout soon. We can see that there are more shorts than longs, or just more asks than bids. People are asking to sell their Bitcoin more so than buy the Bitcoin, okay? And that just goes to show, with Bitcoin dominance kind of staying stagnant, not a lot of new money's coming into the market. That has a lot to do with it. Okay, so let's take a quick look at liquidation levels. Let's go ahead and go back to 1 month and kind of see what that looks like for us, because I think it's important to note a few things here. First of all, we obviously have a lot of liquidations there at about 31,100. Keep in mind, these are a lot of open positions that either never got filled or were open and closed before they were filled, and or they got closed because they wicked up here and hit this level. But for the most part, you can see a lot of other potential trades that never got filled or never were acted on, right? They may still be open. But if we see down here, it's pretty definitive just how obvious the amount of liquidations were to the short side here, or longs getting liquidated, shorts succeeding. We can see that right there at about 26,900. That little candle wick there wrecked a lot of people. Okay, same with the previous wick here, down to about 27.3. A lot of folks didn't expect the price to come even close to 27,000. Thankfully, we did. We took some healthy profits as a community. Just so you know, we just took 50% again here yesterday after 3 days of a nice little swing trade for our short position for Bitcoin. That being said, though, the bottom is tentatively in, and we want to kind of wait for confirmation. Let's take a quick peek, though, at open interest. I'm very curious as to where the most interest lies. And this is, once again, for the last week worth of trading. So obviously last week has been fairly red. We can see for our longs, they are... Let's go ahead and get in here a little bit. We can see longs are essentially in a position right there where it's 27,600 is the most amount of longs right now. So majority of longs are underwater right now. Okay, so that's not a great sign for the longs. And when it comes to shorts, that's just really helpful in understanding that, hey, they're probably fairly profitable. There are a lot of shorts at about 27.6 are effectively in the green right now. Okay, there's also a lot of new shorts opening up right now at 27.3. Big surprise. I'm considering a short position too. All right, so I totally get it. So again, that's kind of where we're at. That's kind of the overall sense of the back end stuff, the level 2 data you could say that you cannot see traditionally on the charts. And what that means for us here, well, let's find out. First of all, we got our RSI still under 50, obviously, trending more towards 30 now. We've got our money flow index dropping very hard. Okay, when the MFI starts dropping, typically the RSI drops with it and or the price. So you can see this here previously, just to kind of give you an idea. Money flow index drops, price drops a few days later. Okay, so there's a strong chance we're going to see the price action get lower from here. Now, are we going to break that level? I think it's pretty probable. I don't like the idea of it, but I do know that it's really something we want to kind of come to terms with, okay? Because again, we've retested this level multiple times, right? You can only retest that level without it breaking for a while, right? So we're literally 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe roughly about 9 days that we've traded this level here at 27,000. I don't think it's going to hold much longer, honestly. But again, strange things can happen. But the key takeaway here is that the money flow index coming down, dropping hard like that, it's usually a sign that the price is going to continue to drop with it. We also have a MACD divergence. We are still plateauing here, so no strength in that. But I do feel like we might actually see the price come down from here. If we take a look at the moving averages, once again, 50 is our saving grace here. 50-day simple moving average at about 27,150. Now, notoriously, 50 on the SMA is a support level or resistance, obviously, depending on which side you're on. But it's not necessarily something that you can rely on 100% when you got a lot of these other contributing factors that look like they want to come down. Another thing, too, and I haven't touched on this, I sent out a tweet this morning, S&P is not looking good right now. Okay, so it's basically just dropped below its ascending trend, and there's a great chance it'll continue lower here as well, and that oftentimes foreshadows Bitcoin's movement too. So, is it a good time to short Bitcoin? I think we're getting close to it. Yeah, I mean, just me personally, I feel like we're right there on the edge. So we already have a short open for Bitcoin, so we'll probably look towards shorting potentially some other trades, of course, maybe some alts. I do prefer Ethereum and a handful of other larger cap coins, but there's a few that are looking pretty juicy right now. All right, enough said about that. Let's go ahead and take a look at the 4 hour and kind of see what's going on and wrap this up for you. Long story short here, money flow index still coming down. We can see the RSI is trying to pick up on the 4 hour, but not having any success. We're starting to lose this convergence and it's starting to potentially diverge. And if you didn't know, when the 12 intersects with the 26 in a downward fashion, that essentially tells us there's a shift in momentum from bullish to bearish. The 4 hour time frame is my favorite time frame for, as a swing trader, essentially, to identify those changes. So as we continue to diverge here, there's a better, more stronger chance the price is going to come down from here. Okay, so again, it's just one of those things where unless the whales are lulling us into a sense of security in the fact that the price is going to drop, there's no reason for it to come up from here, really, at least not in the immediate future. Okay, I do foresee us bouncing off 25,300. That's this line right down here, and also having some success at that area because that was a strong resistance from before. There is a potential the CME gap at 20,000 could get filled too if we lose 25. We'll have that conversation later, but for right now, I think it seems fairly likely that we're going to break down here soon. We are establishing lower highs and lower lows consistently, and until we break this little trend, we're not going to be in a good position to continue. So ideally, again, the trick to breaking a descending trend is to identify higher lows. Okay, so in essence, you could say that we are establishing higher lows here, but it's not really all that good when you have lower highs more so prevalent, right? So in my personal opinion here at this point, unless we can establish higher lows in the immediate near future, there's really no leg to stand on, and it would make a tremendous amount more sense for the price to go down than up. Okay, so again, for the most part, we're not looking fantastic here for Bitcoin, but once again, stranger things can happen. Ichimoku Cloud is not telling us much either as well. We're range bound. Once again, that just kind of invalidates things. TD sequential is not very consistent. We've got a lot of false positives here. So really, there's almost nothing that we can see here that is beneficial. Okay, so why don't we just take a quick look at the 15-minute here, see if our CC Golden Indicator tells us anything at all. All it really did is tell us to short the top here at 28,000. Which a lot of our members did, and we did too, of course, as a community. Took some healthy profits, again, 50% over the weekend, but for the most part, there's no proof here. We're below all moving averages. I literally see nothing and no reason to take a long. The only reason why you might want to consider doing something along those lines is to potentially dollar cost average. I've been DCing on my way down, honestly, and I have no problem with it because I feel confident in long-term Bitcoin returns, but in the meantime, it's important to go ahead and continue to try to add to your position if you are a long-term holder. Okay, so try not to forget about that, but on the same accord, set your limit orders, right? Set your limit orders on the way down and kind of see if you can get filled. In fact, let's take a quick look at that one last thing and we'll wrap it up here. We're going to go ahead and reverse these Fibonacci retracement levels and just quickly see what our good next target would look like. And it does appear that somewhere in the range of 25,800 would be the next key level support, minus the 25.2, 25.3 range. Okay, so we got a pretty big gap here. And just one last thing to note here as well, if you take a look at volume, you can zoom out all you want, you're going to see a large gap in this range. Okay, so this is almost uncharted territory. As soon as we lose 26.9, I think it's almost perfect prime time to go ahead and consider taking some shorts because there's no volume almost at all in that area, and that's how gaps get filled because there's a lack of volume. And a lot of times these prices are undiscovered because we just jumped right through it. We gapped up in like 4 hours between 25,000 and 27,000, and the price doesn't know what to do in this range. So it has to fill, okay? So it just seems a lot more probable and more likely the price is going to continue lower. Again, this is based on technical data. There are some fundamental things that could very well push this upwards, but for right now, there's no foreseeable reason why it should. I hope this was beneficial and helpful for you. Thanks for sticking around to the end if you did, and obviously thank you again for all your support. If you want to help support the channel, go ahead and join us over here on Twitter. And obviously, if you want to become a better trader, I would recommend using a BitGet exchange because once again, Bybit is unfortunately requiring KYC. So for a lot of my US members, they're unable to use a VPN for that, where BitGet and of course Mexi Global are both good alternatives for that. You use this link, you get some cash back, you get some referral bonus, and we have monthly trading competitions as well, which are a lot of fun. So be sure to check that out. Thanks so much for joining me here. Hope you have a great rest of your day. We'll see you in the next one.